Welcome back. You're watching Commodity Champions. We now turn our focus to the domestic cotton market, and joining us for that is Prabhu Dhamodharan. He's head of Texpreneurs Federation. Mr. Dhamodharan, hi, thank you so much for your time. We heard on what the international guests had to say on cotton, textile and the overall global industry there. What is your sense? Because it has been a difficult time for India as well with what the prices have done. First of all, how are you looking at the prices going forward?
Good afternoon. Actually, we witnessed one of the painful quarters ending September, both in terms of utilization levels as well as margin front. And as you know that the last cotton year, due to robust goods demand and abundant liquidity, we witnessed artificially elevated prices. You know, it's kind of a bullwhip effect. If we have 10% more demand, cotton can show a kind of a bull run, and now the reverse is happening. See, normally in the past, in many bull runs, we witnessed that many commodities used to settle down at 10% higher than the pre-bull run levels. Okay. That means now we are expecting 55,000 to 60,000 range of prices for Indian cotton. That may be the range for short term, ma'am.
As you said, it has been a difficult time, and this quarter clearly has seen the highs and the lows and has been making records of all sense. But what about the demand really? Because we do understand that for the Indian markets or for the international markets, it isn't really a festive time for the textile as an industry, because when you look at the domestic demand or the textile exports, both the numbers have been on the weaker side.
See, actually, the multiple reasons are playing out together this time. Particularly the developed markets like US, inventory readjustment is happening. Just for an example, during the peak of the crisis last year, China to US, it taken around 84 days of time for transit. Now they are getting in 40 days time. So it's very natural for retailers to reduce that 40 days inventory in the system. And they are also facing lower consumer sentiment, higher level of inventory. So it is not the matter of demand contraction, more of a inventory adjustment is happening in Europe, in US market. But in Europe, it is reverse. Really, we are witnessing demand contraction. It will take another 2-3 quarters for them to recover. And third, domestic market, robust sales are happening in retail. We are getting updates from all the retailers regarding the good festival sales happening now. Only thing is, everyone knows in domestic prices are going to correct. Cotton prices, everyone keeping 65,000 in mind. Why should we purchase now? So they are all postponing the purchases. That is creating a vacuum. You know that in India, the whole textile fashion trade works from 7 months to 11 months inventory period. During the bull market, due to expectation of increasing prices, retailers, everyone in the system used to build stock and take the inventory level to 11 months. And now the contraction times, people used to shrink their inventory. The whole system works on hand-to-mouth inventory to the tune of 7 months. I'm talking about fiber to retail level. Okay. Various stages, everyone have their different level of inventory. So in this corrective, like kind of a price correction, automatically people used to postpone their purchases. Right. So I think post Diwali, things will change because after seeing robust sales in domestic market, people will come back for buying. At the same time, in terms of spinning mills are operating at very, very low utilization level, around 40 to 50% in many states. Some states are operating at 50 to 60%. This time we are witnessing a very new trend. Pre-COVID period, irrespective of market, people used to run the mills and even make losses. Now everyone is working on profitability, like cash flow basis. If the market is not doing well, they are reducing the utilization. And they are adjusting the supply and demand in a very calibrated manner. Understood. So demand comes slowly, gradually, mills will step up. So that will keep a price check on cotton prices.
Understood. So what you're saying is that in a month, we will see Indian demand pick up, and because of the readjustment that the international markets are looking at, it might perhaps take a couple of quarters or more. But tell us, when we are looking at demand right now, and as you said, the way of doing business also seems to be changing, what kind of a demand growth is the industry looking for right now, for this quarter, for the next, for 2023, the first calendar quarter there as well?
The current quarter, we may not see whatever the October to December quarter, we may not see a robust demand in any part of the world.
Okay.
Now, the demand destruction too, we need to move towards demand normalization. One of our member yesterday told his US buyer indicated that they will move towards pre-COVID level of ordering in the first quarter of next calendar year. So we are seeing some kind of a demand normalization coming back of calibrated buying from US, Middle East and Australian markets as well as domestic market. Europe will take another 1 or 2 quarters because they are seeing first time historic inflation. They are all in shock. Every day there are some kind of a turbulence happening in those markets. So it will take some more time for them to come back.
Okay.
Now, the very, very important factor in the overall scheme of things, long-term outlook is very good. See, it's now in demand normalized world, it is a matter of who is gaining market share from the available business. US imports around 8 lakh crore worth of apparels every year. We have around 6% share. China plus one opportunity is real. One of our member visited multiple buyers in the American market. He witnessed a very new trend. Many American buyers appointed exclusive sourcing professionals to develop alternate sourcing destinations rather than China. So that trend is real. Only thing, we need to build scale. We need to invest in capabilities. We need to build our competitiveness to grab the market share. So textile will be a long-term story. It will take another, for example, yesterday Apple, some of the analysts mentioned, if they want to take 10 to 20% manufacturing out of China, it take around 7-8 years. The same story for textile also. We are at $37 billion exports. China is with $300 billion. So long way to go. Gradual, steady shift will happen over a period of time.
I agree.
And raw material competitiveness also very, very important to capitalize that opportunity.
I get that point, yes. I mean, as you said, from demand destruction to demand normalization is what we are trying to achieve this time around. And then, of course, demand growth is something that we'll talk about. But I take your point that you say that India perhaps will bounce back faster, and then Europe, and then the rest of the developed world is where we will see demand for this coming back. Thank you so much, Mr. Dhamodharan, for joining us and giving us that sense. But with that, it's time up on this edition of Commodity Champions. Thank you for watching.